Welcome back. Some of the giants of Wall Street have reported results over the past couple of days. We're talking about U.S. banks. This morning it was Bank of America and Morgan Stanley who topped expectations, in line with peers JP Morgan and Goldman Sachs, who reported the day prior. Let's find out more on the results and get the views of an investing professional. Joining me from Vienna, Austria, is Octavio Marenzi, CEO and founder of Opimas. Octavio, thanks a lot for joining us. What are some of the big themes that have emerged thus far from the numerous big banks that have reported results?
Well, I think we saw a pretty clear trend overall. We saw very, very strong results in terms of investment banking. So that really roared back in the last quarter of 2024. We saw very strong trading activity at most of the banks. There were one or two exceptions. So Wells Fargo was one of the exceptions there that didn't do terribly well on the trading side, unlike the others. And then we saw some softness or some sidestepping, basically, in the bread and butter retail and commercial banking space. There we saw lending levels either going down 2 or 3% or up 2 or 3%. We saw net interest income come down a bit overall for most of the banks. And so that's overall the trend we saw. Basically, in a nutshell, very strong markets and investment banking activities and quite muted retail and commercial banking activities and some pressure on lending and deposits, with possible exception of credit cards. So that was the overall picture. I think that was fairly consistent across all the different banks we saw reporting.
Are these type of results repeatable in any degree? One of the risks on big trading numbers is that the very next quarter it could be a completely different picture.
You're absolutely right. And I wouldn't really want to go on the record of trying to predict what's going to happen this quarter in terms of trading. Those numbers go up and down a lot, and that's very hard to say. The lines of business that are somewhat easy to predict are those retail and commercial banking activities. And I think the things to really watch out for there are things like the net interest income that I actually expect is going to do much better in the first quarter of 2025 than it did in the last quarter of 2024. And the reason for that is simply that we're seeing short-term interest rates sort of bottoming out and still going down a small amount at the same time as long-term interest rates are going up. And that kind of steepening of the yield curve typically portends well for the bank's lending activities, since they are borrowing short and lending long, and the difference between those two things is going to be the net interest income. So that should put them in pretty good stead, I think, in the first quarter in terms of net interest income if those trends continue, and I think every indication is that it will.
What do you think of the setup for these stocks, these bank stocks in 2025? There's all kinds of optimism around the bank stocks given the incoming Trump administration.
Well, I would give a word of warning there. If you remember in 2016, when Trump last won an election, we had the similar feeling. There was a very big rally immediately in certain sectors and certain stocks, including banking and financial services and energy stocks, that did sensationally well the first few weeks he was around, or when it became clear that he was going to win and get that mandate. And then they sort of fizzled out in the first couple of years of the Trump administration. Those sectors did not do as well as we'd anticipated and hoped. So I don't know if we're going to see a repeat of that, but I think every indication is very positive. We're going to see, I think, fewer regulations, fewer sort of brakes on mergers and acquisitions, less fear of antitrust action being blocked by the Department of Justice when you want to merge with other institutions. So I expect that to consider. And in sort of the microcosm of the banking industry, I do expect that we'll see a large number of mergers and acquisitions occur as some of the larger banks start to look at these regional players, small and medium-sized banks. So these are interesting targets. And there's a lot of capital being freed up in the banking industry. So I would expect to see a lot of M&A activity taking place in sort of the regional market as the very big banks in the US acquire those regional players and bring them on board.
The regional banks was my next question. We haven't talked about them. What's your outlook on the smaller regional banks in the US? You've just said you expect some of them to be takeover targets.
I expect a lot of them to be in play, and the large banks have a very close look at them. I mean, bear in mind, these regional banks, of course, did not get the uplift from investment banking and trading that their larger counterparts and the larger cousins did. So they simply don't have that activity. So they're really only exposed to the retail banking, commercial banking side of things. And some of them might have still big exposure into commercial real estate, which I will point out has actually held up quite well overall, and I think better than most people expected. So the regional banks are not going to get that lift from trading and investment banking. I think they're going to see themselves converted into targets. But they will see an uplift, I think, from better net interest margins in the first quarter of the year, but nothing dramatic and spectacular. So the kinds of increases that we saw in net income at JP Morgan or Bank of America, the regional banks simply can't repeat that. They simply don't have that business. They don't have those lines of business to do that. And that would speak, I think, further in favor of a consolidation in that space.
If you were to buy shares of a U.S. bank today, which bank would it be and why?
Well, I think JP Morgan is always a good one. They've had a fantastic run for as long as I can remember, so I think they're really strong there. I think Goldman Sachs is looking like they're well positioned as well, and their share price is not quite as highly valued as one might expect. So those were two places I would look. But I would say with the caveat, we've seen a big run up in bank stock prices, and they are looking fairly pricey and expensive at this stage.
Octavio, thank you as always for your insight. That's Octavio Marenzi, CEO and founder of Opimas, joining us from Vienna, Austria.